Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the world of Bitcoin. We're going to be taking a look at some on-chain analytics. We're going to be dissecting what is going on there. We'll be taking a look at the bigger macro view for Bitcoin on the weekly timeframes and share my thoughts and opinions on what I think is happening here when it comes to BTC. As I get into today's video, if you do find it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, what are you waiting for? Check it out. The link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. So why not go ahead and check it out? Right then, guys, let's roll that intro and get right down into today's video. Okay, guys, what we're going to do is we're going to start things off here. This is going to be our weekly view for Bitcoin. We're going to basically just take a look at what's kind of going on recently and obviously the history here. This has been a little while since we've looked at this one. There's a lot going on here. So I think to start with, it's going to start with the simple stuff, right? The green the green vertical lines that you see on here represent the Bitcoin halving events. Obviously, the next one being down here, this Bitcoin halving event in April of 2024, approximately. It's not the exact date, it's just roughly around there. And, we can see as well, we had one back here in week commencing Monday, the 11th of May, 2020. We have one over here, the 4th of July, week commencing the 4th of July, 2016, and then all the way over here as well on week commencing 26th of November 2012, right? So we can see that there are some Bitcoin halving events. Let's talk about these in a little bit more detail, right? So starting things off with the one over this side, the very first one that we see on the chart here. You can see the Bitcoin halving event happened and we saw a really good surge to the upside. But we need to be aware that the Bitcoin halving event didn't create a bullish environment. We were already in a bullish environment before that halving event occurred, right? We saw really good growth here. Bitcoin halving event just so happened to coincide with this fantastic move to the upside. Now, don't get me wrong. Back in 2012, Bitcoin halving event had a pretty decent impact on the supply and demand metrics. Halving the amount that you could earn through mining actually had a pretty significant impact on the circulating supply. Less was going into circulating supply, and therefore, as demand increased and supply was so low, you've got to bear in mind supply was very, very low back here, right? That when demand was coming in, price was very easy to kind of push back upwards, right? So really cool stuff going on back in 2012 with that halving event. And of course, the next halving event where people kind of just looked back and said, look, Bitcoin halving event caused this fantastic run here. It didn't. It had an impact, but it didn't cause it. It just kind of helped push things along a little bit. We have over here a very similar scenario, right? We had the bottom over here in 2015 for the bear market low, and we started on our ascent upwards into that next bullish market. You notice that this Bitcoin halving event, it occurred, but didn't really have an impact. You could argue that actually price went down right here after the Bitcoin actually halved, right? So once the rewards were halved, you can see that, yeah, we actually went down, not up, but we were still in a bullish environment, so we rebounded and we had a fantastic bull run. Again, not the catalyst behind that because we were already in a bullish environment. And, the halving event just happened to coincide within, say pretty much halfway through, because you can argue it's maybe a third way through your bullish environment, your Bitcoin halving event occurs. Then, of course, we have the 2020 Bitcoin halving event, right? And in here, we can see again, Bitcoin halving event happened here, just at the top of this local move to the upside. We kind of stalled out for about 2 months after the Bitcoin halving event, and then we continued our move upwards. But we had to acknowledge that we were already in a bullish environment, where a lot of additional money was being printed back here as well, fueling that next move to the upside. Did the Bitcoin halving event actually cause a bull run? No, not at all. And again, we're getting to the point now, specifically in 2020 and of course 2024, where that circulating supply of Bitcoin is already pretty much fully distributed. There isn't really that much more left to mint, about 1.5 million, a little bit less than that, I think. And so we have to acknowledge that actually the halving event has little impact now on the supply-demand metrics, which basically pushes price up or down. So understanding that supply-demand is what dictates price, and the Bitcoin halving event, which did affect that equation, no longer really has an impact. Historically speaking, Bitcoin halving events also have very little impact in relation to starting a bullish environment. They just so happen to coincide with everything that's going on. It's pretty interesting for the next Bitcoin halving event in 2024. Has the bottom come in? Possibly so, right? As in we've bottomed out, we started our bullish environment, we'll stall out, maybe have a little bit of a drop on the Bitcoin halving event before we continue that run to the upside. It's looking pretty similar to kind of what we've seen previously, right? Bottom comes in, we rally up, we correct down, Bitcoin halving event, we go up, right? And so are we going to be looking for something very similar? And essentially, we've pushed up, we look to come down, we then rally up, right? And so the Bitcoin halving event, I think, just happens to coincide with where we currently sit. It had an impact previously on the supply demand, doesn't really have an impact now. So that's kind of your Bitcoin halving event. So I wanted to kind of explain that a little bit, because I talk about these things quite a bit and people just don't necessarily follow or are a little bit confused as to kind of why a Bitcoin halving event would have an impact on price. It used to, because it affects the supply element of a supply demand equation. However, going forward, it really doesn't. And I'm going to show you what that looks like a little bit later when we take a look at the on-chain analytics as well. Now, obviously, there's a few things that we're doing differently. As much as people don't like to acknowledge it, we are doing things differently in this particular bear cycle than we did in the previous two. Okay, so let's start with the fundamentals. The fundamental side of this, and fundamentally fundamentals on a technical anyway, is that every retracement, every kind of move or crash to the downside, however you want to articulate it, has stayed within a set parameter on a Fibonacci scale. Okay, so back here in the 2015 lows and the 2017 lows, or 2018 lows, I should say, we can see that the price action stayed above 1.236 on the Fib scale. Okay, so that's really important. Both of these two bearish cycles were very, very similar, right? We had this one over here hitting 1.236 in 2015 exactly. We then had the one over in 2018 going and staying just above the 1.236, but below 1 to 1, essentially meaning that we are in perfect retracement territories for reversals. So basically, as soon as you kind of go down between 100 and 123.6% from your high, and you have a three-wave structure here, both three-wave structures, you end up with expected reversal in the market. However, over here in 2022, we went down deeper than 138.2%. Okay, this transformed a typical three-wave structure that you saw in the two previous cycles into a five-wave structure. Not an impulsive five-wave structure, but a corrective five-wave structure. And this is why we were saying back in June, July, August of 2022, expect a new bear market low point. Okay, we've gone and done things differently. Not only do we have a different fundamental low from a Fibonacci scale, as in we're deeper than 1.236, we're down at 1.382 or 138.2%. We also went down for the first time in Bitcoin's history lower than the previous bull market high, which was $20,000. So we know that we're rewriting history, not only from a Fibonacci sequencing perspective, but also from just really easy to understand analytics of saying we've gone down lower than the previous bull market high. We also did a few differences with indicators that were very predictive in these two previous cycles, becoming unpredictive in over what is going on here. In fact, I think there were over 7 indicators flashing out bullish signals back in June, July, August of 2022. Yet all of them were invalidated. And again, that was using the history of the 2 previous cycles, expecting it to repeat itself during this moment, which it did not. Okay, so we have to acknowledge that everything that's going on here is vastly different to what we saw previously. Okay, and it all stems from very subtle differences in different variables that we're getting in the underlying data. Now, as we kind of have this progressive move to the upside, and as I've spoken about before, it is highly possible that the bottom is in down here at $15,632, right? It's very possible. It's also possible that it isn't. And at the moment, because we're rewriting history, we haven't got anything to reference back that has a similar structure to this. We don't necessarily know for sure exactly what is going on. We have an ascending wedge happening up here. Okay, this is a bearish stance. We don't necessarily like this. It is a bearish pattern, and of course we have to acknowledge that there is a potential 3-wave structure that takes you down to less than $10,000 that's still technically in play. So there is no guarantees that the bottom is in. I have a high probability that it probably is. I think we probably have seen the bottom, but I am expecting a 40 to 50% reduction in the price action before we get into that Bitcoin halving event, so that we can then see that as the next catalyst to the upside, as we had seen previously. We might even stall out a little bit with these, so maybe come down a little bit more on the actual halving event as we saw previously. But for the most part, I'm expecting us to kind of retest a 40 to 50% reduction from where we are, and then start really getting some traction going in the price action of BTC. Okay, so I really wanted to kind of just start off this video by talking about where the fundamental technical analysis is. That's a really, really bad way of saying that, but that we have some fundamental variable changes on the technical analysis side. Let's go ahead and bring up the membership website. Okay, so this is membership.𝗕𝗘𝗪𝗏𝗀𝗏𝗏𝗏. Links are in the description below. We do obviously have some Black Friday deals if you want to try kind of like a 1-month deal and test out before you buy, all that kind of stuff. We also have 7-day free trials on the subscription plans as well. So you can basically subscribe to the plan and get a 7-day free trial and all that kind of stuff. In here, we have on-chain analytics. It's under the data zone data portal. If I load it up, we end up with this. Okay, now this here, we have different projects that you can review. At the moment, I've got Bitcoin, Cardano, Chainlink, Doge, Ethereum, Litecoin, and XRP, and I continue to add more. I will get onto actually building this out a little bit more with some more projects in the coming months, so do watch out for that. But here we have all the on-chain analytics for Bitcoin. We're going to just focus in here for a little bit because there's some interesting things that I think people need to know about, and they're potentially getting overlooked, and these are quite important things. So I apologize for the lengthy video today, because it is going to be slightly more lengthy than maybe we're used to. But let's get into this. This here is the overview. It shows you the price action here of BTC across the years. And then, of course, you can see here we have the all-time high, the date of the all-time high. The all-time lows are kind of irrelevant because it's not really technically an all-time low. We are currently 45.31% from the all-time high. It was 745 days since we were at the all-time high. Now, this is what's really interesting, the supply here. So we have 19.553. Okay, so 19.5 million Bitcoin out in circulating supply out of the 21 million. Okay, so we have less than 1.5 million still to be mined. Okay, this is really important. The majority of the Bitcoin supply is already out there. Okay, that means that we shouldn't be expecting the Bitcoin halving to be a big catalyst for price action when price action is only dictated by the supply demand metrics. This current circulating supply is not going to be impacted massively by a new Bitcoin halving. Okay, so understanding that the Bitcoin halving event is not going to be a big catalyst to shrinking your supply in the same way that it was previously, we have to think about how else we are going to see a significant surge in Bitcoin price. And of course, the obvious answer here is the Bitcoin spot ETFs. They are going to increase the demand element of that equation. Okay, so a Bitcoin halving event may coincide with a Bitcoin spot ETF event. It may not, but we don't want to kind of, I guess, count our chickens before they've hatched. I think that's the saying. Or count all your eggs in your basket. I don't know. There's some kind of saying there. You can let me know in the comments below. But ultimately here, what we want to do is we want to be aware that a Bitcoin halving event may actually negatively impact price if a Bitcoin spot ETF has not been kind of, approved or issued by that point. We need to see that increase in demand if we want to sustain a good sizable price on Bitcoin. Okay, let's take this over into the network analysis. There's some more really interesting points in this data as well. Okay, so here you can see we've got addresses. There's 50.6 million addresses. Remember that number, 50.6 million. Okay, out of those addresses, we have 1 million of them being active in the last 24 hours. 852,000 addresses were receiving Bitcoin and 720,000 addresses were sending Bitcoin, which means there's a little bit of overlap between the two. Now, in terms of transactions in the last 24 hours, we've seen 612,000 at $3.6 million of transaction fees. That equates to 92.39 Bitcoin in the last 24 hours. We had 159 blocks added to the blockchain, and so that basically puts us block height at 118,498 at the point of recording the video. Inflation rate is daily at 0.0051. So this is basically how much how many Bitcoin is being mined every day. So it's basically an inflation rate on the circulating supply. Yearly, this equates to about 1.86%, but it does fluctuate depending on how many blocks are mined and all that kind of stuff every day. New issuance in the last 24 hours was 993 Bitcoin. Of course, that will be halved going forward. Okay. So there's going to be a big impact here on the mining operations, more so than there's going to be an impact on price, in my opinion. So basically, in USD value, that's 37.5 million in the last 24 hours that was created from mining. Okay, so we can see all of that in there. So network analysis is quite an important one now. As we come over to the wallets, right, this is where things get really interesting, right? So this particular piece of analysis here, we have different wallet sizes, and the size of the wallet depends on how much Bitcoin that you have in them. So for example, we have units that are greater, or Bitcoin that is wallets that have. Let me get this really clear for everyone, right? So it's wallets, the number of wallets that have more than 0.001 Bitcoin. I really did mess that up, but there you go. Basically, if you've got more than 0.001 Bitcoin in your wallet, then you're counted here, okay? And you can see the line graph, and you can see it's increasing here as more and more wallets start to get created with more than 0.001 Bitcoin. But here's the big kicker. There's only 24.3 million wallets that have more than 0.001 Bitcoin. And as you remember, 50.6 million total. That means that less than half of all active addresses actually have some form of Bitcoin in them. And this is a really, really, really low level. This is basically non-existent, right? As we go up and we say, okay, well, what if you hold just 1% of a Bitcoin? There's only 12.4 million of them, okay? So we know that there's actually a really, really, really small number of people actually holding Bitcoin in relation to the total number of addresses. And we have to then speculate, are those addresses actually lost addresses? Are they addresses that people have just been burnt by crypto, they're never coming back? Or are they waiting to come back into crypto, and maybe they're just not here yet until the Bitcoin halving event or a Bitcoin spot ETF event, right? What we do know is that 50 million addresses were created, or 50.6 million addresses were created, but only 12.4 million addresses actually have only 1% of Bitcoin. It gets worse as you scale this up. 10% of a Bitcoin, 4.5 million. 1 Bitcoin, only 1 million addresses have at least 1 Bitcoin, okay? And of course, if you start scaling it from there, it gets worse and worse and worse, right? So it's really interesting that we have a large number of wallets and a lot of people on Twitter, X, and all that kind of stuff, and they'll talk about the total number of wallets, and they say, look, we've got this huge adoption curve going on for crypto. We can see X amount of wallets created. We can see that our total wallets finally hit this number, but they're not really taking into consideration how many of those actual addresses have native tokens in them. Are they actually being utilized, or are they just empty wallets being created to push a metric? And this isn't just Bitcoin, by the way. This happens across all the different chains as well. So it's interesting. Now, as we kind of talk about whales, we can see here across time how the whales have been behaving. Currently, there are 2,027 wallets that have at least 1,000 Bitcoin. Okay, this is actually down 3.34% in the last 365 days. You can see if I zoom in here, he says, he'll zoom in. There we go. You can see that actually they haven't really been overly active. They've been very, very flat. They're waiting. They're not necessarily participating. And again, if you take a look at 10,000 Bitcoin per wallet, you can see these guys have actually been coming out most recently and have not been coming in. Okay, so contrary to popular belief that essentially these large kind of whale investors are buying up and they're the ones that are causing this move to the upside, they're not. They're looking at this. They're actually using this move to the upside in 2023 as an exit opportunity. Last 365 days, last year, you can see that wallets with over 10,000 Bitcoin are actually down 6.09%. They're not backing the move to the upside. In the last 180 days, it's down 5.26%. And so there's no positivity to be seen here on the 10,000 Bitcoin per wallet side of things. Even if we take a look at the likes of MicroStrategy at 100,000 Bitcoin or more, there are 4 wallets here. They've been fluctuating up and down, but they have been remaining pretty static at 4 wallets. You can argue in the last year, we actually lost one of these wallets altogether. It's negative 20%. Okay, so what's really interesting about this is we haven't really changed too much. You can see that they're pushing up, they're pulling down, and they're hovering around a little bit. But for what's really interesting to me is that these large institutional level investors, your MicroStrategies, through to your billionaires and your larger investors at 10,000 Bitcoin or more, all the way through to just your regular whale at 1,000, there's not really a lot of activity. There's not a lot of reasons to kind of say these guys are the ones that are pushing the price action higher. If anything, that they're still not backing the price action just yet. 100 Bitcoin or more is your, I love this chart. These are your traders. These are your professional level traders. They're in and out all the time. It's so much to the point where you can see here that the number of wallets that have 100 Bitcoin stays pretty flat. And it's pretty much like a flat line all the way through. And so not much change happens there. We've got the high net worth individuals. Again, they've been in and out a little bit. They started to waver most recently as price kind of hits this higher range. Really, the only people who are really kind of getting involved in Bitcoin are your retailers. Your retailers are the ones that are currently buying up the opportunities here, but the larger investors are not. Now, it's really interesting anyway. Moving over, we can take a look at wallets that have dollar value rather than native tokens. I don't generally like this view so much. I prefer to look at the native tokens than I do the dollar value. Dollar values are very subjective. It's the idea that people are going to be investing or purchasing less Bitcoin because Bitcoin is more valuable, I don't necessarily believe in that. Ultimately, when it comes to investing, the aim of the game here is to basically increase your net wealth through multiple cycles. And to do that, you don't just invest $10,000 in cycle 1, take all your profit and then only invest $10,000 in cycle 2. Generally speaking, you would make your profit, you would then reinvest more than you invested in the first cycle, and you rinse, repeat. And so when we take a look at it at dollar value, yes, you can see some interesting things, but it doesn't really help you understand whether or not the wallets in terms of the native tokens are building. Now, here we can see that actually this tops out at $10 million. I have access to no more data above that. And well, really, I think we need to know what's more than $10 million here, considering Bitcoin's price. So I don't think this is overly useful, this one. You can take a look at it if you're a member and you want to kind of dive into the data of it. It is interesting. It has some interesting kind of points of view in there, but it's not overly that useful in comparison to the native token aspect, which I think is the most useful. We can take a look and we can break down the the supply into wallets, we can see how much Bitcoin sits within certain amounts of wallets. This is also very, very interesting. So in here, obviously, we have the 19.5 million circulating supply, right? 17.4% sits in supplies of 1% of addresses. Now, this is obviously really obvious. This is really bad, but yeah, it's obvious because we have 50.6 million addresses and very few addresses actually hold Bitcoin. So yeah, it's no surprise that 17.4 million sit in addresses or in 1% of addresses. Ultimately, pretty much all of the supply sits in 10% of the addresses, which you know because we already went through that from a different point of view. The top 100 addresses equate to 2.8 million Bitcoin. Very, very interesting. And then, of course, you get these pie charts. Now, these pie charts will show you how much Bitcoin sits in certain wallet sizes. So, for example, if we wanted to know how much Bitcoin sat in wallets that had more than at least 1,000. So we obviously have the count of wallets over here, right? How many wallets have at least 1,000 Bitcoin, right? There's 2,027 wallets, right? So 2,027 wallets. What we can do is we can go over to that slice of the pie and say there's 2,027 wallets hold 7.6 million Bitcoin, right? So we can be really quite specific about that all the way down to the very decimal point. So what's really interesting here is you can see, okay, there's a pretty sizable chunk of the pie sat with those level of investors. If you go up a little bit higher, you have your 10,000 Bitcoin or more wallets. They hold 2.9 million Bitcoin. It's about 2.56% of the Bitcoin supply. It's quite interesting. You could also look at it at dollar value, but again, I don't think it's overly useful. And you can see how it's more evenly distributed than it is on this slice here. And the micro strategies, they're not holding as much as you think. There's 672,000 Bitcoin in those 4 wallets, right? So there's 4 wallets that hold 672,000 Bitcoin. It's really, really interesting. I'm going to skip over the exchanges because I'm still looking for a better data source on this one. I don't like this as it stands at the moment, so I'm going to skip over that. I'm going to move over to liquidations. Liquidations in the last 24 hours are only $2.3 million. Pretty interesting kind of stats here. We have 35.85% on longs getting wiped out, 64.15% on shorts getting wiped out. 𝗗𝗶𝘀𝗰𝗋 is the exchange with the most amount of liquidations at $943,000. You can see it's kind of minor stuff going on here at the moment, nothing major today. We have total value locked. Again, it's some interesting kind of stuff going on at the dollar value, but you can also flip this into native tokens. And of course, we have miner data as well. But overall, that's kind of the on-chain analytics. Okay, so some few interesting things going on there with the on-chain data. So hopefully some of that is really useful to you guys. For me, I look at this stuff and I think, yeah, I'm not so confident in everything that's been happening in 2023. I'm definitely not that confident in the Bitcoin halving event and stuff like that. So if we come on over back to our trading view, ultimately, this is kind of where I think things are landing. I'm expecting a kind of a 40 to 50% reduction in the price action of Bitcoin. I'm looking for us to come down in towards some of those support levels, right? But we do have to move through quite a few first. We are going to be looking at $30,000 to $31,000 as the first support. Then we lose that. I think we've got 24 to 25 as support, and then we've got 20 to 21 as support. I think we're going to have to see how price reacts at each of those levels, but I am expecting a 40 to 50% reduction once we hit that upper area between $38,750 and $40,000. So guys, sorry it's been a lengthier video. It's about 30 minutes. I'm going to wrap it up right there. If you have found it useful and informative, smash that like button. I do appreciate that. If you are new to the channel, why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Until the next one though, guys, have a fantastic day.